welcome to episode number 3, Tony. Look at us go.
Yeah, I know, fast. It was like yesterday when we first started it. Phil, we spoke about Perth on the last one, about why Perth went so crazy and in the last 4, 5 or 6 years, and the cyclical nature of Perth. I currently live in Melbourne, and I think I told you in episode 1 that we moved to Brunswick in 2017 because of work related issues, and the house we bought in Brunswick was a tiny terrace house.
Whereabouts in Brunswick was it? What pocket?
It's not far from Anstey Station. So it's, you know, A1 Bakery. Do you know the area?
Yeah, I sure do.
A1 Bakery, we're literally about 50 meters from that. So it's a really happening area.
Yeah.
Lots of restaurants close to the, obviously, like literally 1 minute walk from the tram, 5 minutes from the train station. And it's a decent house. Like, it's got 2 bedrooms and 2 living rooms and a big kitchen and 1 bathroom. However, the price has just not moved. And I just want to know what is going on in Melbourne. Even the rent, I mean, we're happy for our renters. They're nice people, and we haven't really raised the rent really at all.
What rent are they paying?
About 600, and 7-8 years ago, we were charging like 550. So we haven't really shifted the rent that much. And honestly, we can't shift the rent that much because the rent hasn't really gone up. And also, we don't, we're good renters. We're happy to not raise the rent.
And this is one of the key points that a lot of our doctors, we do need to make it commercial as well. You can be kind, but at the same point, you really do need to treat it as an investment. So when we're managing all of our doctors' rental properties, both commercial and residential, we always need to we don't want to let it go too far away from...
No.
Or else you become a charity. So you've got to have that fine balance.
No, we're okay. We're just slightly under market, but we have a good relationship with the tenants, and we have had previous bad tenants, and it's always like I would take a small loss. Anyway, beside the point, what I want to ask you is, what are your thoughts on Melbourne? Why is it the price has remained so stagnant? Melbourne is now the most affordable, I think, capital city in Australia, would you say? Like, even coming to Larry Perth now, possibly.
Well, Brisbane's overtaken Melbourne. You can buy a Melbourne house for $1.5 million and buy in a really good quality suburb within, say, a 10-kilometre radius of Melbourne, versus Brisbane. You probably now need to start looking in that 10 to 15-kilometre radius now for a nice family home. Perth is now outperforming Melbourne. Adelaide, no one liked Adelaide. We were big fans of Adelaide back in 16, 17, 18. So we're buying a lot of stuff in Adelaide for our doctors in and around the city fringe. And that's been probably the best performing capital city over the last 7 to 8 years. And people aren't aware of that. So it brings me back to our original point in our first discussion. If you're looking to buy a property, don't get caught up in terms of where it is, what it looks like. Just treat it as an investment. And Adelaide has been the best performing capital city for our doctors over the last 10 years. And this is a good discussion because our doctors, we had a discussion with a few of our doctors many years ago that didn't want to take our advice and invested in Melbourne. And they bought a little terrace. They were buying terraces in Carlton, which is a really good quality suburb in Melbourne. We obviously, during COVID, that impacted the student population within that particular precinct, especially the overseas student population. So anyone that owned student accommodation, those little studio apartments, really struggled. They couldn't sell them at the time, so they really struggled. Rents dropped. So if you look at we might share this graph, but if you look at Melbourne in terms of the cycles, it's probably the cheapest that we've seen it on record since 2018 in terms of value, in terms of where the market's sitting at, assessing its affordability index. So that's the percentage of your income. If you had an 20% deposit and you borrowed 80% from the bank, when the affordability index hits around 35 to 40% of a person's income, we know Melbourne's cheap at the moment. At the moment, the affordability index has gone from 59%, it's tracking at 54%. It's going down slightly. But both, to our last podcast in terms of builders can't build any apartments in Melbourne because it's just too expensive to do at the moment. and you're seeing the rise of a lot of build to rent type projects by a number of corporates coming in. And I think the other kind of big factor for Melbourne, why it hasn't performed, is obviously the amount of tax that you pay if you're an investor in Melbourne. Why would you go and buy an investment property in Melbourne now when, you know what the land tax threshold here is in Melbourne? It's 50 grand. So our lovely state government came out and announced that the threshold got reduced from 350 to 300 to 50,000. So anyone that even owns even that unit in Brunswick, you're now paying land tax on that unit. Whereas traditionally you were below the threshold and you weren't paying land tax. So even the units are getting taxed. Now, on top of that, the government are taxing foreign investors coming in as well. So there was significant amount of foreign investment flowing into Melbourne and Victoria a number of years ago. And if you look at that numbers, they're looking elsewhere. Melbourne and Victoria is no longer attractive for a foreign investor to go and buy commercial property or residential property now. So I think, with a change of government, things might become a little bit easier, but this state is in significant amount of debt, and it's only getting worse and worse. So you look at the population of Melbourne's, we've got a population of 5.2 million people. And if you look at the amount of overseas migrants coming in, it's happening at levels that I don't think the Melbourne residential market can sustain unless there are significant changes being made. So, a lot of our doctors, they haven't really invested in Melbourne over the last 10 years, so that we've actually been okay, and it hasn't been a big concern to us. But there are doctors that come to us with portfolios that they own maybe 6 or 7 properties in the one in Melbourne. And those are the doctors that I've had to work through and say, well, they're getting land tax bills of, if they've got $10 million worth of residential property, and say $10 million of that is in the land value. Do you know what their land tax bill is every year now?
50,000?
200.
200.
200. So a doctor,
Oh my God.
So you're coming in and saying, well, I've got a $10 million portfolio. It's all in Melbourne. And then what we're having to do, we're actually having to tell them to sell down out of some of those existing assets, go and buy a commercial property to, in another state, just to get their land tax bill down. So the land tax, with the doctors that have owned large portfolios in the one state and have it in the one entity, their land tax bills, it's no longer feasible for them to own all of those properties under that one entity. So we're saying that this is what the next 12 months will look like in Melbourne. You're going to see very strong rents will rise by anywhere between 20% and 50% over the next 3 to 5 years, okay, in Melbourne. So
just because the population is booming and there's nowhere to put everyone.
Well, we don't have enough stock. We are not building enough stock in this particular. There are not enough bedrooms currently to handle the amount of, we need to be building. If you look at the national shortage, we've got a national shortage of about 120,000 houses, and we need to build another 60 to 70,000 units just to cater for the incoming demand. Last year alone, we had, if you looked at the metro, it was 424,000 people move into the country, and a large majority of those moved into Melbourne. Now,
right.
So you've got a significant, we've got significant undersupply and chronic undersupply issues just to cater for the rental demand here in Melbourne. On top of that, you've had a government that have heavily taxed the investor. So if, you're a doctor and you say, well, I've owned all these investments, I'm getting taxed at a very high rate. But the doctors that are going to do really well, the ones that have owned property in Perth, Brisbane, Adelaide, and they're now looking to reposition their next property. So I think it's a great time to be upgrading your home in Melbourne if you're a doctor here. A lot of doctors shy away from, no one wants to renovate when they're buying their homes now. I've noticed a lot of our doctors are saying, Phil, go and buy something that's done and renovated, because I don't want to spend or go through the headache of doing a knockdown rebuild or a renovation, because renovations have doubled in terms of what you're spending on your renovation. Mm-hmm. But if you can go and buy an investment in Melbourne, and in the housing sector, you probably need to be around that $1 to $2 million mark, but you get a lot more value in that market than you do in Perth and Brisbane currently. So if you're taking a longer term view, with your investment portfolio, I think Melbourne is a great opportunity, but it's very early in the cycle. Now, what's going to prop up values in Melbourne is that if the RBA come out and cut interest rates by another 0.5 or 0.75, it's going to increase house prices again. So you've got probably 12, 24 months until the market shows signs of improvement. But this year in Melbourne, you're going to see very aggressive amounts of rental growth occurring. So the same story in Perth. When you start to see that rental growth starting to occur, then the next stage is house price growth. As long as you don't own 20 properties in this market, I think Melbourne represents really good value to do your upgrader or go and buy an investment for both units and houses, because there's the replacement cost discussion, and you can buy good quality older style units, oversized to owner occupiers for, $600,000, $700,000, $800,000 in this particular market. And you can buy really good quality residential investment stock for $1 to $2 million. But if you borrow 90%, it's going to cost you a fair bit to run. So you've got to look at your cash flow management.
I think that's very interesting, isn't it? Like I can see, Victoria's in debt, so obviously it needs to tax more. And on one side, for people who are trying to get into the market, not having the market going saying like Sydney's done is good for first home buyers. But now you're getting to that situation where if no one wants to put their money into Victoria, then there's not enough people actually building houses for people to live in because the population's growing.
Yeah.
And invariably that's going to push up prices anyway.
Absolutely.
So it's kind of, there's no win. I mean, from a government's point of view, I guess, yeah, the thing to do if I was the government, is to got to make building easier. Right. And did you say it's actually harder to build in Victoria than it is?
Melbourne is probably one of the most ancient capital cities in terms of planning provisions. Your ability to actually get a project off the ground shouldn't take 2 years, and by the time you go through that process, and it's all the on costs associated with actually getting the development, just digging dirt in the ground. That puts a delay. So we have to expedite, and the government have come out and made certain changes to expediting that process, but they've got a long way to go. So that would be the first thing that I would introduce. Incentivize developers to build stock in this capital city, not push them away, because these developers, I tell you what, they've moved up to Gold Coast, they've moved up to Brisbane, where there's a significant infrastructure outlay. You look at the large infrastructure projects being built here in Melbourne, they're all starting to shelve them because they can't afford to build them. They're running out of money. Our state has run out of money. So they're going to have to incentivize. They're going to have to come up with new, whether it's Labor or Liberal government, they have to come up with new policy to make it attractive for a developer, or they either need to, lower your land tax bill. You've got the windfall tax. We are the most heavily taxed state of all the capital cities in Australia currently. So, a lot of people are talking about Melbourne, but it still comes with some risk. It's not just, but if you're taking a 10-year view or a long-term view, I think Melbourne's an excellent play to put in your portfolio if you are holding it long-term. And I think it's an excellent time to be buying your first home in Melbourne. And I think it's an excellent time to be upgrading your home in Melbourne.
I got it. Yeah. Because I remember, just back to your point about the big infrastructure projects, I remember there was that Four Seasons Hotel with that 2 buildings that were sort of semi-connected and had all these forests growing in it. I think that was going to be the tallest building in Australia or something. So I think that's got shelved. And I remember there was going to be a St. Regis Hotel built on the side of the river.
Yeah.
There was going to be a, because I really like hotels. There was a Shangri-La that was going to be the CBD. I think they're all gone now, which is a shame because I was really looking forward to them. But yeah, I guess it makes sense. How can you possibly invest as an investor or a developer when you can't make your money back? And it's ironic that we're in a situation now, and that's going to really push up prices because now you don't have, people literally don't have places to live, right? And that rent is going to go up.
And it's not just that, and we talk about the office sector and the commercial sector here in Melbourne. The office sector in Melbourne is extremely distressed. It's finally showing signs of improvement. But we do a lot of commercial investment and, obviously buying a lot of our doctors' medical practices and commercial. There's there's a lot going on in that particular industry as well, and industrial. So office is really struggling in Melbourne, but we're probably seeing the nearing of the bottom for office, and we're looking at office buildings. You can buy them at 40 to 50% discounts at the larger end of town. But residential, I think if you're looking to buy your investment in Melbourne, I think there's opportunities now for the first time in a long time, nearly 10 years.
Well, thanks, Phil. That's very enlightening. Well, good news for me because that's where I live. So, we're being. Hopefully, I actually start taking your advice because you weren't around 10 years ago when I was first starting.
You'll listen to me one day. We will slowly get there. Hopefully, on podcast 40 to 45. I think we'll probably get there eventually.
2073. Yeah. All right. Thanks, Phil. We'll keep this moving. I hope you guys listening have enjoyed it. I'm certainly learning a lot.
Excellent. Thanks, Tony.